Hello everyone, George DeSantis here with a look at the market for the week ending November 24th, 2017. Hope you had a wonderful Thanksgiving holiday. And we begin by taking a look at the disclaimer. Now you can pause the disclaimer and read it. Simply states that this is not a solicitation or advice to buy or sell securities, and it's just educational in purpose. So let's begin now by looking at some charts. Now, before we turn to the charts of stocks, I want to show you a page from page 11 from Larry Williams' book, The Right Stock for the Right Time. Larry was one of those people that did some of the early research on cycle, cyclicality, etc. And there's a Moore Research Center, MORE, whose data that he cites. Now on this page you can see he talks about the best years to be trading stocks. So if you look at these years here, the years ending in 5 have a total percentage of gain during this time, during these 10 or 12 years ending in 5 of 254%. Years ending in 8, 164. Years ending in 7, minus 74%. What Larry points out is relative to our time frame here, 2017, 2018, is that years ending in 7 usually have a bit of a pullback toward the end of the year, and the year ending in 8 is usually then a very good year. We can see some examples of that here. For example, down 33%, up 37%. Down 31%, up 16, etc. Down 34, up 13, down 13, up 33. So even when we have a down year in the year ending in 7, we seem to have a significantly better year into years ending in 8. So I wanted to point that out. It's interesting. Of course, there isn't any sophisticated statistical data here. It's simply descriptive data. And I'm a knowledgeable person in statistics, so I'm not making any claims of significance here. Just interesting. Let's take a look at some charts. So here's a weekly chart of the S&P 500, and of course we can see here that we had an up week last week. We were up 5.34%, 5.34 points, I believe it is. In any case, the market closed above 2602. And you know, many people set 2600 as a target for the end of the year. Some analysts anyway. So we're there. We're at 2602. Whether we go higher from here or not, that's the big question. So let's take a look at some of these indicators to see what we can glean from them. First of all, we became overbought here when we hit the upper Bollinger Band and consolidated during this period, and now we seem to be rallying to new heights here. My suspicion is that we're going to go higher from here into the end of the year and early next year. So RSI 12 is above 60%. We can see that ADX, the dotted line, trending up, indicating to us that there is a trend, and of course we can tell from the data, from the chart, price chart, that the trend is up. Also, DI plus is above DI minus, directional index. Well, Larry Williams' percent R is above the 60% line, and I like to use the 50% line as a marker. As long as the chart is above, Larry Williams' percent R is above the 50% line, I indicate that that is an uptrend. Indication on uptrend. MACD shows us this bearish divergence still. Although I believe it may have played itself out here, still a chance that we could go lower based on the MACD divergence. It's a very powerful indicator on a weekly chart. But I don't believe we are in much danger of a further drop here, especially since we have the strength of these moving averages above each other. The 4, the 9, and the 30. So let's take a look at a daily chart. Now on the daily chart, still bullish. We have the 4 over the 9 over the 30. These are moving averages. But one of the things we should note here is that we are now approaching the upper Bollinger Band again, which is 2.72 standard deviations. So don't be surprised to see a bit of a correction here, because markets don't go straight up, of course, we all know that. Williams percentile, wait a minute. Yeah, Williams percentile is above 60%, and that's a bullish indication. And we also have a directional movement index beginning to trend up again, the ADR. And DI plus is above DI minus. So the daily chart is also looking quite bullish. We have MACD trending up from below the zero line. And then we find we have this support line here, 2565, if you recall. It held there and rallied from there on the daily chart. So daily chart, weekly chart, both looking pretty bullish. I don't think we need to be too concerned about a major pullback here. Let's take a look at some individual stocks. So the first stock we're going to look at is Apple. And this week, I think I'm going to simply use TC2000. Just to mix things up a bit. We go away from the other software, Best Choice, but we can get a lot of data here. So let's take a look at this. Weekly chart on Apple, we have a bullish engulfing candle. We did have a little pullback here 2 weeks ago. We hit the upper Bollinger Band, so we come back. We came back here, touched the 4%, the 4 exponential moving average, and we had a good week last week. Okay, now if you look at the bottom of the chart here, we have RSI 12 above the 60% line. We have DI plus above DI minus. We have Williams percentile above 60%, MACD trending up. So Apple on the weekly chart is really looking pretty good again. But on the daily chart, we can see some interesting things. First of all, we hit, as I mentioned on an email to you, we hit the Bollinger Band, the upper Bollinger Band. We came pretty close to it again. We pulled back here and came up pretty close to it again. And then we consolidated and actually pulled all the way back into the buy zone, or what our friend Alex would call consensus of value between this 9 and 30 exponential moving averages. And now we have the 4 crossing above the 9 again, and they're both above the 30. So we have a nice uptrend here. Now, when we look at Bollinger Bands, we find Bollinger Bands entering a squeeze. And usually we get a pretty explosive move out of a squeeze, as we did here. So on the daily chart, we're also looking pretty bullish. And of course, I still have quite a few shares of Apple. I'm going to be holding it. Seasonally, it's a good play too. We know that seasonally, most of these stocks are going to go up during this time of the year. November 20th to the middle of December, going into the end of December, is when most of these stocks are going to be moving, historically anyway. So let's take a look at something else. It's Facebook. Now, let's look at the weekly chart first. On Facebook, we could see that it's been trending up nicely, pulled back a little here, or leveled off, consolidated this gain here, and now it's off to the races again. It's been up nicely last week. Bollinger Bands seem to be entering a squeeze again, so that would get resolved either to the up or downside. We're not quite sure yet. My bet is that it will get resolved to the upside. Now, all the other indicators looking pretty bullish. RSI 12, DI plus and minus, Williams percentile, MACD just about the zero line, or trending up a little bit from below the zero line. So I like Facebook here. I still own some shares because I bought it back sometime recently. And let's take a look at something else. Actually, before we go on to new stock, when you look at the daily chart on Facebook, you could see that squeeze occurring here on the Bollinger Bands, and you can see how on the daily chart these bullish candles here, one is it's almost an engulfing candle, but we do have an engulfing candle here, bullish engulfing candle. So we expect this thing to go higher. Let's take a look at another. So let's introduce something new. It's a Direxion Daily Home Builders and Supplies Bullish ETF. It's leveraged 3 times the normal ETF of the home builders. Well, what do we have here? I would say this is a shoulda, coulda, woulda. This thing is up 240% for the year. Because when you look at January 1st, January 6th, the stock was at $26. It's now at $84.50. Of course, one might say, well, it's really really very overbought here, and so that's why I say it's a coulda, shoulda, woulda. But who knows how far this will go? It's been up 49% since October. But remember, the fast rate goes up, the fast rate falls because it's leveraged 3 times. So it's very risky compared to other investments. But I just thought it'd be fun to mention it too. Let's take a look at something else. Here's a weekly chart of Visa, one of my favorites and current basic holdings, in both of my 2 big accounts. And you can see on the weekly chart, 4 is above 9, 9 above 30, trending up nicely. And we now have a bullish engulfing candle on the weekly chart. So that's pretty bullish, of course. And if we look at the daily chart, we can see that what happened here is it pulled back into the buy zone between the 4 and the 9, in fact a little below it, and then it started trending up again. We are now in a squeeze. We're going to be coming out of that squeeze. I would bet that it's to the upside. So I like Visa a lot here, and as I said, I own a lot of it. Let's look at something else. And here's a weekly chart of NVIDIA, another one that I own, and I would hope to ride it until it convinces me that I shouldn't hold it. Right now, it made a nice run up here, trended up, consolidated for a while, seemed to be a bullish engulfing candle here on the weekly chart. All of the other indicators look pretty bullish to me. So I'm holding this one. We'll look at the daily chart. We can see how the daily chart reflects that they closed within the buy zone and then it moved up. And we still have the 4 above the 9 and 9 above 30. And all the other indicators are looking pretty good to me. So I'm still holding this one, NVIDIA. Weekly chart of Netflix. You can see that it gapped up here and then we got a little retracement into the buy zone. Then we moved up again, consolidated that a bit and had a nice bullish engulfing candle here. And then we consolidated those gains. We seem to be getting ready for an up move once more. And the other indicators don't look too badly at all. This is the RSI 12 is above 60 and so on. So the Williams percent R is looking pretty bullish. Still like NVIDIA a lot, would hold that. Here's a quick look at Etsy. My friend Laura recommended it some time ago. I had traded it, did a swing trade on it and made some money, but now it's looking like a decent stock to keep on your watch list now. In fact, IBD this weekend is saying Etsy, a provider of handcrafted goods, is 3% below a $17.70 entry point and bounced higher Friday from the 50-day line. So you can see it fell into the buy zone here and now it's looking to go higher. So at 1770, they're calling that their buy point. That's an Investor's Business Daily. So good one to keep it. And the last one we have time for is Align. I bought this back again. It had a nice run up, of course, all the way from back in April. Its stock has done very well. And now it's also seemingly getting ready for another move up, because we had this touch of the Bollinger Band. We had some consolidation here, but it didn't pull back much, and I'm expecting this thing to go higher. That's all we have for today, and hope you had a wonderful weekend, and we'll do this again next week, hopefully.